All right, we're going to take a look at the S&P 500 here, and I'm not going to put a lot of lines on this chart because what I just want to show is how major the 600-day moving average is and where it slopes out in comparison to where the 200-day moving average is on the S&P 500 to where it slopes out, and how huge basically a miss of 1099.14 today was. You see the high up here, 1096.42. Without most likely, without a whole lot of technical analysis here, this chart pretty much says that a miss of 1099.14 today, and you see the high 1096.42, sets up a drop down to first retest the 1057.53, which we don't think will hold, then go down underneath this low here at 1019.95, and as you can see 927.02 is where the result is. But again, what is so major about this? Look at the 1440.24, which slopes down from the S&P all-time high of 1576.09. Notice that if we draw a line, and we'll do that right now, a red line to designate the downtrend line, you'll notice something here right away. Here's the red line. We pull it down. Notice that that is a major downtrend from the 1440.24. Also keep in mind that 1121.56, so right around here, and we'll put a green line for that. That's the key spot to get back in the upper end of the 666.79 to 1576 range on the S&P. Now, if you notice, take a look at that. Two huge resistance points here. If you can get over the green line and close over it, you probably do get back to 1440, believe it or not, and probably back and retest even the high of 1576.09, as crazy as that sounds, without a time frame in mind. But that most likely doesn't happen here. You can totally see this downtrend line. So for the bulls to say that the S&P has busted out and is in a bullish uptrend, not until it can break that key level. Now, if you take a look here again, there's that 927.02, and look at how that slopes down, and look at where that it was, right there. That's the 200-day moving average. So we're going to look at the VIX here next, the volatility index, to set this up. But this is a extremely powerful chart that pretty much says if you can't close over 1099.14 today, the result is probably a test of the 50, which fails, breaks this trend line here, which was already busted and broken back over, making the 50 now true resistance, and then as a result go down to the 927. And you can see right there, it's a big enough gap where it even shows up on a 2-year chart here that the index would fill its gap. So that's the S&P 500. We're going to state that we don't think 1099.14, the 600 DMA, is going to be busted. That means 1101.36 will remain the high. That means that 1121.44, the 50% retrace of that entire 1576.09 to 666.79 range, will stay intact, and we will look for a test of the 200 on a loss of the 50, making the 50 resistance. So 1019.95, that's the 1019.95 is the 60-day low, but we've talked about this in great length. We'll put I guess a purple line to designate the upper 2/3 of that huge range, and it's right about there, just under this 1019.95. If that's not held, and you've got 107.51 here, then we don't expect 943.85 to hold, and we'll look for that 200-day moving average and fill the gap. So that's how we see it. Looking at some other technicals here, you can see that the Williams percentage indicator is at a level where it's going to turn. Yes, the MACD, you could make a case that it's about to turn up, but this is a long-term chart, and as far as the slow stochastics go, they're about to turn down, and the volume is starting to get to a point where it's topping out. So that's the S&P 500. We'll back this up though with the VIX, and we'll show you that 22.5 on the next chart is huge, and today's low on the VIX, 22.78. So more to come on that, but that's the S&P.